Hey everyone, welcome. We're just going to wait for a few more people to show up, but thank you guys all for joining. While we're waiting, if you could go ahead and let me know if my voice is sounding okay, if you can see the screen clearly, and we'll get started in just a few moments later. Hey Tony, how's it going? Good to see you. Doing well, guys. Doing well. How's it going, Tommy? Anil, how's it going? While we're waiting, if you want me to review a particular chart, let me know down below in the chat here. Just drop the ticker and I'll add it to my watch list here of charts to go over that I took from Twitter. Perfect. Good to go. Good to know, guys, about the audio. Perfect. Greens from Hong Kong. Awesome. Yeah, Roku's on the list. Perfect. There we are. You got 44 people in here. Nice. We'll wait just a few more moments for people to show up. But in the meantime, yeah, any charts you want me to talk about, happy to go over them. And we've got a list here. I've also got the potential leadership list as well, which I'm happy to talk through as well, how I build that. And in this live stream, basically, the format is I'm going to talk a little bit about how to build a weekend routine. Then we'll transition over to a bunch of charts as many of you guys basically want me to go over. Hey everyone, how's it going? All right, we've got some tickers coming in. Awesome. Let me add that to the list. TNDM, NVIDIA, LRCX. A lot of semiconductor related names are acting well. Tesla's on the list. UPST, good ad right there. Amazon, PanW. Yeah, keep them coming, guys. And we'll just be waiting a few more minutes. eBay, okay. I hope you guys are all having a good weekend and have already done your homework and ready for the week ahead. That's really the point of this stream, to kind of guide you guys to build your own routines if you don't have one already. There's a question here. Can you share your TC2000 scan to filter stocks for watch list? I'll show you a little bit of how I do it, but really the nitty gritty of it is I go through charts one by one. I can screen a little bit, but for the most part, I look through a lot of charts and try to find those setups and opportunities every single week. And with that, I think we'll get started in just a few moments. And to kick things off, I just want to say that this is for educational purposes only. This is my opinion, my thoughts, but hopefully I can share something that's valuable to you. And to start things off, I want to talk about a weekend routine. So what is the point of a weekend routine? Well, it kind of lets you ignore all the noise that is there day to day during the trading day. There's a lot of noise there with Twitter, social media, all that. And on the weekend, we can go ahead and really nail down and find those best opportunities and stay in tune in the market a little bit better because we're escaping from that noise and we can objectively look at those weekly and daily charts. So first things first, I always take a look at what the market did, the indexes this past week. So for instance, I go over to the NASDAQ composite, either here or in Marketsmith, and it looks like TC2000 is having a little bit of trouble. So let's go over to Marketsmith here and take a look at the NASDAQ. So first things first, I look at the NASDAQ composite as well as the S&P 500, and just basically take a look. How did it act every single day? Was it up or down from the open? Are we above a rising 21 or rising 50 SMA? If so, we're most likely in pretty good shape, and it's okay to be looking for long positions. But I also keep in mind that we might be a little bit extended from a proper consolidation. For instance, during this week right here, we had already run for basically 10, 12 days, and it was time really for us to pull back to the 21 EMA, and we did that pretty violently, but it was a normal price action in my opinion. And then we've had another nice run from this Monday where all of growth pretty much gapped down and then finished really strongly. And now we're kind of going in a little bit of a sideways range at this moment, but still above a rising 21 and 50 SMA. And this Tuesday, we had a little bit of trouble with a lot of growth stocks, but a lot of the leaders I'm watching are still just kind of going sideways on below average volume. So that's kind of a quick run through of how I analyze the indexes. And I do pretty much the same thing on the S&P 500. Let me close this right here, as well as the IWO and also the IWM, because I think it's helpful to also see past the kind of large mega caps and see what the smaller caps, mid caps are doing, which is usually the type of stocks that we're trading usually. So I think it's a good sense to get to take a look at those indexes, and I also go ahead and take a look at the FFTY, the Innovator IBD 50 ETF. This is also a good representation of the type of stocks that I am usually trading. And basically, I'm looking at the same things. Are we above a rising 50 and 21 EMA? Are we basing? Are we extended? Are we trending? How is the overall index acting? So once I've got a sense of that, what I move on from there is I go over to TC2000 and take a look at my list of leadership stocks. And I basically sort this list by this weekly change. And I basically go one by one, take a look at how they're acting. Are they all breaking out into new all-time highs? Are they trending nicely above key moving averages? Or are we seeing some warning signs, some distribution? Are they breaking key moving averages altogether? So this list right here gives me an excellent sense of basically what the market is doing. And this will often reveal market weakness or market strength before the indexes do. So this, in fact, is, in my opinion, a little bit of a leading indicator. So once I've done that, I go ahead and start building my watch list for the week. And I start with this list right here. If there's a potential leader that's setting up in a nice setup where I can manage my risk, or potentially next week it will develop one. For instance, LC has had a strong earnings gap up, not necessarily actionable for my type of trading. I like to manage my risk pretty tight. But if it goes sideways for a few days, I could conceivably enter this stock next week. So that's why it's on my watch list. And if you ever see blue flags right here, that basically means that it made my watch list for the week. So just going through a few of these, Dexcom similar to LC, not necessarily actionable unless you bought the earnings gap up here, but often these type of breakouts from 11-month bases are the start of a trend rather than the end. So I'll be watching this one carefully for potential entry, similar to what Snap is doing. Can I manage risk versus this pivot and all of those different setups? EMPH also near potential pivot around this level right here. Maybe it goes sideways and sets this as a pivot as well, but I could conceivably enter it next week, and that's why it's on my watch list as well as the leaders list. Tesla as well, acting really nicely, really strong, and is looking like it's going to challenge the 700 pivot, although we have come quite far in just 2 days. So maybe we get a little bit of a rest and consolidation, and then once again, you can use this high as your pivot. So that's kind of how I go through a bunch of charts. And what I do is I go over to Marketsmith. Let's go back there. And I open this up. Actually, let's go over here. And well, actually, here we go. So I go over to a scan, which basically sorts out and takes every stock in their database. And I just call this stock list. So there's 6,307 stocks within this list. And from here, I go over to this, export to Excel. And then what I do, let me actually go ahead and open up the most recent. Let me do this off screen here. I'm just going to open Excel here. So I use Excel to basically sort through these columns and give points basically for different CAN-SLIM characteristics, different growth characteristics. So my most recent one actually on this computer is going back all the way to March. I usually do this on my laptop, which is why I don't have a more recent one. But this is very simple. I've got some videos on this. I basically assign points. Is the composite rating over 85 plus 1 point? Is the EPS percent change last quarter over 100% plus 5 points? And if there's a characteristic that I don't like, for instance, is the earnings per share last quarter less than 50%, less than negative 50%, I'll detract points. So that's kind of the basic system here. And then I have an IPO watch list, I have a leaders watch list, and I have a performance watch list that all come out of this, this screen right here. And they basically look for different types of qualities. And I combine that into a TC2000 watch list. And like I was saying earlier, in the end, it's a lot of going through a bunch of charts. And in order to minimize this, I do use some screens here. I use the scan feature in TC2000. And for instance, let me erase all of these. I'll check for the dollar volume which is in general the average basically closing range over the past 5 days times the average volume over the past 5 days, or you can do 30 days, 50 days, whatever you want. And I want that to be over usually 10 million or so. So I'll basically cut out and delete any stock under 10 million and remove that automatically. And another screen that I'll do to speed up my process is I'll write this formula: C is greater than average C50 to get all the stocks above the 50-day moving average, and so on and so on. But from that point, I basically do a lot of basically tabbing through. I sort by the stochastic 10-4 and start with the ones that are the most down within their range, and just go through them one by one and flag any of the ones that are basically interesting I could potentially position in them next week. Then once I have about a list of 100, 150, I move those to a different list and unflag everything and really pare it down to the best of the best, both fundamentally and technically, because I'm not just looking at the technicals, I'm also switching back and forth with Marketsmith here and checking those CAN SLIM characteristics. Basically, does it have strong earnings growth, return on equity, sales growth, fund sponsorship, all those different things that we look for. I consider those as well. So really my watch list is the result of both fundamental and technical analysis to basically find the best of the best opportunities going into the week. So that's a really quick run through. I'm sorry if I breezed through that, but if you have any questions, let me know. Yeah, that's a quick run through of it, but really you have to put in the work. If you want to find the best opportunities every single week, you do have to spend 1, 2, 3 hours going through charts and doing some manual labor, of course, with some fundamental and also technical screens to help you out along the way. But with that, if you have any questions, let me know down below in the chat. But other than that, I think we'll just go through a whole bunch of tickers that you guys have suggested. I see a bunch of names coming through. So we'll just go ahead and do that. But I'll pause for just a quick second to see if anybody has any questions about my routine. And while you guys are typing those in, if you do have any, I think a routine is invaluable. I think it's an important step to being basically a professional trader. Even if you're not doing this full time, you can still be a professional trader and treat this like a business. And you're not going to go out there. If a professional trader is going out there unprepared for the week, they're not going to succeed. They're going to call audibles on Monday, on Tuesday. They're going to see a ticker flash up on social media and just go out and buy it. That's not what professionals do. Professionals stick to their plan. They have their own basically internal process, and they wouldn't need Twitter or YouTube to trade for themselves. And they would basically learn their own strategy, how they trade within the context and foundation of CAN SLIM, and how it best applies to them. So I think a routine is an extremely important step in a trader's process, especially if you're new to it. And I know a bunch of traders who kind of post their routine on Twitter, so follow along with them. They post their watch list, go through those tickers, see how it applies, and if that ticker applies and meets your own personal criteria. So Steve asked a really good question. How much time do you spend looking at multiple timeframes, daily, weekly, monthly? So the main timeframes I look at are mostly weekly, daily, and 65-minute. And that's why I'm building my watch list. During the day, I might go a little bit more intraday, but let's say I'm looking for an entry. Well, AMD broke out. So let's say we're looking at AMD before the end of the week. We know earnings are coming up, and I always have a column here with the next earnings report. That's another very important step of having a weekend routine. You want to know when the stocks you're interested are reporting, and really you don't want to be buying them beforehand if they're reporting that week. You want to wait for that reaction. But in general, a stock that I'm stalking, I'm taking a look at the daily to basically map out a potential entry through a high or something. But I'm also stepping back and looking at a weekly chart to see the context of the move. Has it been outperforming the market? Is it above prior resistance like AMD is? And is it in a long-term uptrend as well? I always like to see a stock above a rising 30, 40-week moving average. So it's trading with the longer-term trend. So I don't spend too much time going through it. I just quickly go back and forth and see if the trend is aligning on all those different timeframes. We've got a really good question here. Is your routine evolving? Yeah, it's constantly evolving. from the traders that I interviewed, the U.S. investing champions, hedge fund managers. For instance, Jim Ropel, he mentions his routine in one of my interviews. And from that, I'll take bits and pieces and see what makes sense for me. And for instance, Mike Webster's has influenced me quite a bit. And we've got the Webby RSI here, which helps me keep track of whether the indexes are extended or not using his Webby RSI. So I take bits and pieces from all the different traders that I meet on Twitter in real life and have interviews with, and try to find what works for my own personal style. All right, I'm not seeing any more questions here. Oh, hey, Dennis, how's it going? Yeah, Dennis is one of the great traders that I like to see what's on their watch list. Even though I might not put it on my watch list, I always like to see what they're looking at. They have some, Dennis goes through some great stocks, and I love when he does that little handwritten watch list as well. I love seeing his little comments. Those are awesome. And they help you kind of put yourself in the mind of the trader who's doing it. So I think it's really cool. We've got a question here from Ronnie. How do you incorporate pointers from the interviews you conduct? Well, it's kind of just what I said. I obviously ask them questions. If they say something that's really valuable, or they have a mindset that I think would be helpful, I'll basically incorporate that into my own system. I don't quite know how to go more specific than that. But when you're watching my interviews, if you enjoy them, go ahead and take notes. If they say something like, I check the IWM on a weekly chart before anything to see how it's acting, make a note of that and try it out the next week and see if it works for you. Dennis's Twitter handle, let me go ahead and get it real quick. Dennis C230, and I'll paste it in the chat. Somebody asked if I trade options as well. I do not. I'm sticking only to stock at this point. Probably options are something I'll look into in the future. But right now, I'm just not experienced enough with it, and I wouldn't know how to manage my risk properly over there. Do you use monthly charts to look for green line breakout opportunities? Yes, I do. But mostly I can get a sense of something, if something is a green line breakout, by looking at the daily and weekly. But for instance, AMD was a green line breakout. Right here, it formed a new all-time high. Right at this line, that is at 99.23. So there you go. It was a green line breakout last week, but mostly I'm just looking at a daily, weekly, and 65-minute time frame when I'm quickly going through charts. When I actually build my, excuse me, when I actually go ahead and build my watch list, my focus list, I do pare it down a little bit further and take a look at the weekly, make note of any important levels like this one right here. And I knew, for instance, with AMD, it had struggled with overcoming that 100 key Livermore 100 level quite a few times. So I knew if it finally gets through that, it could go on a nice run, and that really remains to be seen. I'm expecting some type of normal reaction here. It has gone pretty much straight up for 3 days on very high volume. So a low volume pullback, maybe some inside days, would be completely normal. And I'll see if maybe I can add on a push up off any pullback. Let's see. Brett asks, hey Brett, how's it going? Didn't catch the filters in TC2000. Minervini, I do. So depending on the time frame, I might put in some Minervini trend template things like, is it above a rising 200-day moving average? But usually I just do very simple things like, is it above a 50-day moving average? Is the dollar volume greater than 20 million on a day-to-day basis? And then I just go through about 400 stocks. So I try to filter out as little as possible and see as many stocks, because it not only helps you find ideas and opportunities, but it also gives you a sense of overall groups that are performing well. For instance, if you notice a lot of semiconductors are shaping up the right-hand side, a lot of solar names are shaping up the right-hand side, that might show you that there's some rotation back into solar. So I don't like to limit too much the number of stocks I watch, because it gives you a good overall sense of how the overall market is doing. It's a market of stocks. It's not necessarily a stock market. So I thought that was really cool. And I think that's really helpful. We've got some questions about my exit positions, how I exit positions. So usually I'm exiting as a stock is breaking on high volume through a 21 EMA, if that is a moving average that had respected in the past. So I'm a little bit shorter term than the people who use the 50-day moving average as their guardrail, but that's really what I found works for me and my personality. But I am looking to extend my time frame as much as possible. And once I do have a little bit of profit, give it a little bit more room. That's something I'm working on personally this year. John asks, how do I get down to only 10 stocks out of 400 for a focus list? Great question. I'll go ahead and from those 400 names, I'll flag basically around 100 or so. So this was my, actually, here we go. So this was my kind of universe list for this week. That's what I call my universe list. I take that 400, pare it down to about 100, 150 names, and then I'll unflag all of these and then once more go through all their charts and check their fundamentals in Marketsmith and really pare it down to the best of the best based on price and volume characteristics and also fundamental growth numbers, institutional sponsorship, all those metrics. So combining the technicals and fundamentals. Kevin asks, you go over sector ETFs to determine which are the leading sectors, focus on stocks in those sectors. That's not really part of my process. I know Patrick Walker does an excellent job of doing that. And I know that's a great way to do it. I mostly take a look at a bunch of stocks and from there make a judgment of what groups are leading. So I might then go ahead and take a look at TAN. If I see a lot of solar names moving up the right hand side, you can see that it's trying to bottom a little bit. And also SMH, I noticed a lot of semiconductors are acting well. So you get a sense of how the ETFs are doing by looking at a bunch of stocks. We've got a question here. What factors about an IPO would interest you to trade that stock from the beginning? I would definitely go ahead and recommend you watch my interview with Greg Morton. He's fantastic at trading IPOs. And basically what I'm watching for is some type of IPO base. So here we've got DOCS forming an IPO base here. And this ultimately failed, or it hasn't quite failed yet, but it didn't really break out and go anywhere. But I'm watching for some type of consolidation. I'm never trading that first day. I'm waiting for some type of base to form to manage my risk against. But I'll go ahead and actually find that interview and paste that in the chat because I think it's a really valuable thing to know how to trade those IPOs because there's a lot of opportunity there, but you have to know how to manage your risk. And I also take into account the fundamentals. Is it a story that I like? Is it profitable? Does it have triple digit earnings, sales, great institutional sponsorship? Who are the underwriters? All those different things. Let's see. I'm trying to find this link here. There we go. So I'll paste that in the chat right here. Oh, yeah. Mark asked, Kathy Donnelly's on IPOs as well. Absolutely. She's fantastic. Her, Eve, Eric Kroll, all the Life Cycle Trade crew. Definitely recommend that book, The Life Cycle Trade. It's a great way to learn the statistics behind IPOs. And I'll paste that interview as well in the chat. And she also gave an excellent presentation at the Trader Lion trading conference, which is live and completely free, not live. It's completely free on YouTube. So if you haven't watched that just yet, go ahead and search your name and Trader Lion, and you should be able to find it. Dario asks, what's the best way to value a company that is not pulling in profits currently? I don't make it my business to value a company based on PE ratio, price over sales ratio. I more look at what the growth numbers in terms of sales earnings are, and I also take a look at the chart. So if the chart is acting right and it's perfect, I might ignore it missing earnings or not being profitable. But if there's no fundamental growth numbers, no sales growth, no earnings growth, and the chart isn't right, I'll just move on. It's not even worth considering in my realm of competence. Oh, great question. So somebody asked, what is the difference between an IPO base and a due diligence base / phase, technically speaking? IPO base is very short term. Definitely watch the Greg interview because he basically goes ahead and defines IPO base. It has to form within the first 28 days, I believe, and then not decrease more than, I'm not sure if there's a requirement, maybe more than 40% or so. But the IPO base occurs very soon after a stock IPOs, but often after an advanced phase from this IPO, or even if it doesn't form an IPO base, we'll go into a longer institutional due diligence phase. So what that looks like, if we go to Zoom here, is is a longer term base here. So this is its IPO. Then it forms a little bit of an IPO base right here. It has a little bit of a run, but then this ultimately fails and we enter a longer term decline and consolidation, which is when institutions are doing their research on a stock. They're deciding whether the stock is going to grow in the future, whether it's worth taking up a position. And that gradual accumulation of those funds and institutions is what creates the right side of this base. And from this point on, many of stocks with this pattern go on very nice runs. A lot of the winners from 2020 had this exact same pattern. So Peloton had the same institutional due diligence phase, CrowdStrike as well. And there's just many other examples. Fiverr had a really long one. So often this lasts about a year or so. And I think Kathleen Donnelly mentioned that she starts looking at stocks when the 200-day moving average starts appearing on the chart. So after 200 days, that's when she starts looking for entries in a stock within its institutional due diligence phase. So right now, for instance, I'm watching a stock, Snowflake, which had not an IPO base because this isn't quite proper, but a nice IPO advance phase. But then it really fell apart and formed a longer term consolidation. And just now we're seeing the 200-day moving average. Let me go ahead and make sure that's showing up on the chart. We're seeing that pop up as well. I'm not seeing the 200-day, but oh, it's the 2000-day. That's why. There we go. So you're seeing the 200-day just start to pop up on the chart, and that's when you're starting to look for an entry. And obviously, it has to be a constructive pattern. You're not just buying anything because the 200-day is showing up. So that's a little bit of a tip there. And yeah, Mark says team is a good example of an IPO advance phase. Yep, so this fails pretty quickly, and then it had an institutional due diligence phase, and this actually didn't progress from that phase and formed a longer term base, and then it had a nice move, but for sure. All right, Jamie S, is it risky to trade stocks that are current new price highs and or new RSI new highs? Well, that's pretty much all I do, but with any setup, however you're approaching the markets, and it might not be can slim. You have to manage risk in some way. You might even be an investor, but you have to manage risk either by position sizing, using a stop loss, diversification that doesn't quite manage risk, but it might help mitigate it if you're spreading yourself within different industries. But you have to manage your risk to some extent. So myself, I use a stop loss as well as position sizing to make sure that even if a stock stops me out 1, 2, 3, 4 times, I'm never taking a significant hit to my account, and I never average down. I only average up. So if a trade is working and I have a 10% position and I want to bump it up to a 15% position, 18% position, I'll only add as the stock proves itself and continues to work for me. And personally, my max position size is about 18%. That might seem high for an investor, but if you're managing your risk very tightly and not going all the way in right away and only adding money to good when a stock moves out of an additional setup after breaking out strongly on high volume, showing all the signs of an institutional quality leader, then it's not necessarily risky. There's always risk in the stock market. You just have to learn to mitigate it, whether it's through position sizing, using a stop loss, or other means as well. So Felix wants us to take a look at ZI. So this has been a really annoying one to trade. So I tried this a few times back in here. I think I tried it right here. I've gotten stopped out quite a bit of this stock. It has not worked well for me, but it's starting to form up a little bit of a structure again. All the moving averages are moving up in the right direction. The 200-day has already appeared, and it might be setting up for another challenge of the 55s, which has failed. But we do have earnings on Monday. So this might break out after earnings, but it might fall apart and return to a basing period. But whatever the case, this is a pretty choppy one to trade. It's been hard to manage risk here, and often buying on the pullbacks is easier than buying on strength in this name. Saber asked a really good question. Do you put alerts on your charts, and how much time do you spend on the market screen each day? Great question. So all of my focus list names, as well as many of the leaders, I will set alerts. For instance, for ZI, I'll go ahead and set an alert right below the prior day's close. and I can do it right in TC2000. That's how I usually do my alerts, and it'll basically send me a text and pop an alert right here on my screen if the stock moves through that line. But yeah, I set alerts on my focus list names to make sure I'm looking at the chart when it's potentially moving through a pivot. And usually during the day, I'm really focused the first hour. But after that, I really let my alerts handle things, and I might go out shopping, go to the gym, whatever, and watch stuff on my phone. But I'm always aware of the markets using my alerts, and I always have stop losses in as well to protect my downside if anything should happen catastrophically. But in terms of how much time I'm looking at the screen, really intently on during the first hour as well as the last hour, I like to watch that as well. But during the day, not so much. I'm off doing other things as well, making videos, what have you. Yeah, so Brett asked about XM. So this is another one moving up. It's actually I typed in Zoom here. The XM is another one moving up from its institutional due diligence phase. Potentially, it's a little bit early, a little bit before the 200-day, but shaping up nicely. A nice move on Friday as well. So it's been basing for about 6 months, which is pretty substantial. Excuse me. And you do have a big test coming with the 42, 43 level. So how it acts here will reveal itself a little bit, but so far this looks pretty good. Volume is increasing as it moves at the right hand side. That's another good sign. And I like how it broke out on Friday. Nice 3-bar break to the upside and inside day to the upside as well. And this pattern also produced one of FinTwit's favorites of last year, Livongo. It was also forming institutional due diligence phase and then a cup within that institutional due diligence phase before it broke out and ran incredibly in I think just under 6 months. It advanced like 300%. But this pattern right here, the moving up the right side and buying at a proper base right near the top here, right above this prior high, that's a really powerful pattern. And I've seen a ton of stocks going back even in history that show this same exact pattern before they go on 100, 200, 300, 500% moves. So Sid asked, how's it going, Sid? Good to see you. Always appreciate your comments on my channel. Thank you very much. But MP, so you see I've got alert here actually, because this is one potentially forming a little bit of a base here moving up the right hand side. I'm not sure if I would call this an institutional due diligence phase because it's quite far from its IPO or SPAC. What I think it came public by a SPAC, but regardless, this is a longer term base moving up the right hand side. This looks pretty constructive, so I've got alerted, and we'll see if this acts well next week. EXPI I haven't looked at in quite a while. This looks a little bit weaker, and this declined quite a bit, 75% from its top. So there's a lot of overhead supply to work through here. And right here, there's a lot of overhead supply even around the 40 mark. So if you can push through the 200-day moving average, that would be a start, and move through these highs as well around 42. All right, so yeah, XM looks pretty good. Ray and Ross have their eye on that as well. Ray was watching that pretty closely. IIPR, let's take a look at that one. This looks pretty good. Nice longer term base. It's already been in an uptrend quite a while, so maybe the proper buy point was back in here. But if it forms a handle, yeah, to shake out some weak holders, I think this would definitely be a worthwhile setup. Nice support right near the 200-day moving average at the bottom of this base. No huge distribution signs. This side of the base is a little bit choppy, but if you remember back during this period, everything was moving up and down 15-20%. Ranges were enormous. So this is pretty normal action and similar to a lot of stocks in the market at that point. So, all right, here's a good question. Richard, can you explain how to calculate your price target after a cup and handle breakout? I don't really do price targets. There is that classic 20% profit zone from that proper buy point. So often stocks will form a new base after 20%. So if you're a short-term trader, you might just want to take profits at that point. Or if you're a position trader, you might just want to take partials. But I don't really do price targets. I'm going to hold a stock as long as it's basically acting right and obeying those key moving averages and not showing any huge signs of distribution, or if there's not better opportunities out there in the market at this point. let's see. Let's take a look at AMAT because that one had some nice moves on Friday. I think it actually moved up right to here, squatted all the way back, and then finished the day pretty strong. So it is a nice volume day. This is a pocket pivot volume signature, and it's right below the 140s, which has been a resistance in the past. This has been a choppy one. I traded this one in here, got a nice run with it, and then I think tried it back against the 21 EMA, didn't really make progress, got stopped out, and it's just been going sideways, but holding up really well. So if this breaks out here on volume, that's a sign of institutional support, and this is pretty much a 4-month base at this point. So I see a question on NEO. So this one was one I traded nicely. This is probably one of my better trades and better stocks from last year. I got a nice breakout here and traded it a few times, but and ultimately got stopped out, I think, as it broke the 50-day. My last shares, right, I think this day right here as it broke this low. But anyway, this has formed a pretty long and deep base, so about 50% or so. It has moved up nicely the right side. We had a little bit of China weakness the last few weeks, and this one has fared a little bit better than most, but there's still that added risk. I'm not really looking to take on Chinese stocks and put them in my portfolio at this point. There's just some added risk there. And for me, this stock isn't shaping up quite as well as many former leaders like Snap. So it's not top of my list here, but I'll be watching to see how this shapes up. This is still a relatively new stock, so if it goes through a nice long digestion period and forms a proper chart pattern, I'll be interested in this stock. So Brett asks, could you explain how to identify a first stage base, second stage base, or third stage base pattern? So let's take a look at what's a good example for this. Let's bring up Roku just maybe. Yeah, okay. So if you look at Roku's run here, I'm going to zoom past here. It had a nice run here. It formed one last base, which looks a little bit late stage, a little bit sloppy. But then during the March correction, we undercut the low of this base. So whatever base count this was, whether it was 3, 4, 5, undercutting that base resets the base count to 1. So after the March correction, we form a nice consolidation right here. And this is what I would call the first stage base during this uptrend. Then we kind of move up, form almost a flat base on top of this base. So this might be a stage 1B. Then we move up, form another consolidation right at this point. This would be your stage 2 base. And then we don't really get a stage 3 base until this run. I believe that this base in Marketsmith is actually still a stage 1 at this point. But I would call this one stage 1, this one stage 1, this stage 2, and this may be a stage 3 at this point. CrowdStrike as well is pretty similar. We had a longer term base here. This is stage 1, stage 2, and then this is the stage 3 base. So you kind of count along based on when was the last time a base got undercut and shook out all those weak holders. And then with each consolidation, you add one to the base count, basically. Yeah, thanks, Dennis. The AMD reset is a good example. So let's see. I'm not sure. I believe this is a stage 3 base here, but regardless, during this consolidation, during this pullback, we undercut the lows of this prior base, resetting the base count to 1. So this base right here, this cup and handle, where this is the cup and handle, is now a stage 1 base. And most short market leaders, I think TML trader Ermin did a great presentation of it. Most short market leaders make their runs from stage 1, stage 2 IPO base bases. So really focusing on these early stage bases keep you kind of entering at the beginning of a move versus the end, and there's a higher likelihood of it working out. Let's see. Let's take a look at BABA, because I'm sure there's some more questions on Chinese stocks. This to me has been I don't think I've ever traded this stock, but it had a nice long consolidation period right here. Then it's just kind of a larger cap. It's a slower mover. It made a nice run, 40%. And then as soon as it broke the 50-day on a gap down on high volume, it was really a no touch for me. So it's within the context of a longer term downtrend. The 200-day is sloping down. And even with all the recent stuff, this chart hasn't looked great in a long time. I would rather be buying stocks that are breaking out to new all-time highs at a proper can slim basis. Those are the type of stocks that are changing how we work, live, and play. They're producing new and revolutionary products and services, and they're growing rapidly in terms of earnings, sales, and margins. And their proper basing patterns, their charts, are due to the institutions accumulating shares because they recognize the potential of that stock. For me, this type of chart signifies distribution from institutions, not accumulation. Basically, during market weakness and during corrections, institutions will support their highest conviction names and make sure that they don't fall too much. Usually a proper base, I believe, during a correction is about 30-40%. So this is, it might not be quite as big percentage-wise, but with a larger cap move, a 40% drop is quite substantial. And this has been broken really since these gap downs on earnings on high volume. So moving on, let's see. Yeah, you also have earnings. For Baba, we've got a note here from Sid. Baba has earnings in 2 days. So I never, ever, ever buy just before earnings, hoping it will go up. That's not going to pay off in the long run. You have to manage risk, and an earnings day is basically a binary event. A stock can gap up 15%, but it can also gap down 50%, and there's no positive expectancy with that type of trade. So I never, ever do that. Let's get back into going through some tickers because I've just been rambling on here. So let me make sure I cover all the names that you guys requested. So DOX, we already talked about a little bit. Still hanging in there right near the pivot. I traded this on this day, got a pretty good entry right near these highs, but I was basically stopped out, I think, 0.5% above my cost on this day when it really fell apart. So still hanging in there, found support near the 21 EMA, but we'll see how this acts early next week. NTLA had a big earnings gap up. It's holding that high volume close right here, which is very constructive. Nice upside reversal bar on the 27th, and it's moving up from this point. This is a little bit far from these highs. Ideally, I would have liked it to just go tight here, but still acting pretty constructive and going sideways on lower volume. I'm not sure. In my view, there's no viable entry just now. Maybe it pulls back and this becomes a pivot, but you've also got this point of resistance at about 153 or so. But for this type of setup, I would definitely go ahead and watch Ben Bennett's presentation at the Traderline conference. He talks about how he likes to buy these high volume earnings gap up setups. So definitely go ahead and check out that video. Brett asked, why do I prefer bars over candles? Most likely it's just because I learned this way first. Obviously there's people, I can go ahead and change it real quick here in TC2000 from bars to candlesticks. This represents the exact same data as bars, but I just learned these open, high, low, close bars first. So that's probably why I prefer this. I just can quickly see where was the open, where was the close, and how did the stock progress over the day. And just in general, TC2000 I think is an excellent piece of software. I'll actually go ahead and paste my link if you want to get some money off your first purchase if you want to try it out. But you can do so much different customization things to this software and do a lot of research as well. And if you want to use my layout, I've got many videos where I share the link to that. So go ahead and try this out if you want. And I'll go ahead and put that link in the chat right now. Yeah, and I can also go ahead and share my chart here and put that in the chat. So let me share, and this is how easy it is. Chart template, create link, and boom. So yeah, definitely go ahead and check out TC2000 if you're looking for charting software. I'm very happy with this. I pay it monthly just like everybody else, but I think it's extremely powerful. And you can see I've got a ton of setups which do different things. I've got the Webby RSI, which is easy to build. I've got the 50-day check, which basically determines whether the stock is historically extended from a particular moving average. Looking at the NASDAQ composite, we were a little bit extended, getting near that 6%, but we've pulled back nicely recently, back down under 3%. So a little bit in a Goldilocks zone and still just going sideways, but we'll see how it acts from here, whether we hold this low or challenge these all-time highs. But moving on, let's get back to some charts. LRCX, one of the strong semi names, Looks very similar to AMAT, just kind of before it broke out, and we'll see how it acts versus this pivot around 648. SWAV, I know Click, you wanted me to take a look at this. This is a first stage base, so nice and early here. Nice move up about 40%, and now it's pulled back below the 50-day, but not living below the 50-day. It's actually back above that moving average. And you've got some high volume on this pullback this day and this day, but we've bounced on a little bit lower volume. So ideally, I would have liked some tight action here, a burst up on high volume, but this is acting pretty well. Let's take a look at a weekly chart. So it's always good to get multiple time frames and incorporate that into your analysis. We had an inside week and then a nice inside week and up. So this looks pretty good on a weekly. I would have liked more volume last week on this move up, but I like how it closed right near the high of that week, which is pretty good. So that is SWAV. Moving on, we've got Moderna. This has been a super powerful stock ever since this breakout. And I had it on my focus list back here. Didn't take it, unfortunately, but it had a super powerful move, 72% in just 1.2 months. But at this point in my system, how I trade, this is too extended. I have to wait for another base to set up and at least a shelf. Excuse me. So for me, this is too extended. You really want to catch this just as it's breaking out here within 2-3% of that pivot, or on the retest and tight action near the key moving average. And then as it pushes off there, or if you like to buy on weakness, you can buy against these lows and manage risk that way pretty tightly. But you've also got a nice oops reversal. I made a video on that setup recently that I learned from Ticker Monkey. Yeah, you could have worked your way into this stock quite a few ways, but I somehow didn't manage to, even though it was holding up much better than the rest of the market. And if we go back to BNTX, I believe that's on the list. If not, we can just type it in. This was also holding up really nicely when a lot of growth stocks were showing signs of distribution that 1 week. BNTX was holding right above its 50-day. You had another oops reversal on this Thursday, and some nice action and a break of a DTL here. And then this has also been a rocket in just 14 days, up almost 50% on really high volume. So this looks great. This is exactly what you want to see on a breakout. Jamie asks, how do I decide if a price is too extended? I want to buy as close to that pivot as possible, usually within 1-2%. I don't want to get too far than that. And I definitely don't want to buy a stock when it's just kind of in no man's land, 10% above a pivot. So if you just see a stock right here, BNTX on this day, it's moving up. It's up 6% on the day, but it's also 20% from proper buy point. And you're buying it just because your buddy on Twitter texted you, or you saw somebody like me post a chart of it. That's not the right way to approach it. You want to, and this is kind of how it comes back to the weekly routine. During that weekend routine, you want to have a specific list of setups that, based on what ifs, you'll enter. So if you see it breaking above this pivot on this day on 50% above average volume buzz, that's when you go ahead and buy it as close to that pivot as possible, using alerts to make sure you're looking at that stock as it's moving through the pivot. But you don't want to just buy a stock in no man's land, because often when a stock is extended like this, there'll be a natural reaction where it has an inside day. It shakes out intraday below this low and then recovers by the end of the day. And if you didn't buy right, you're just going to be shaken out and won't benefit from the longer term trend. And you're shaken out because you bought the wrong point. You didn't build up that cushion to absorb that completely natural reaction. So you want to buy as close to that pivot point as possible. So Jaggy asks, manage risk, is it always a distance to the 50 SMA or the last swing low? That's one way to do it. My risk is usually if I bought it on this day as it's breaking the DTL and that's my setup, I ask myself, when would that setup fail? And basically that setup would fail if it breaks expectations and breaks below this low, as well as the confluence of these different moving averages, the 200 SMA or the 50 SMA here. So I like this setup. This would have been a really good setup. Again, I didn't take this one, but you could put your stop right here. If you bought right as it broke the DTL, you've got less than a 5% risk. That's actually a little bit high for me. I like 3 to 5% usually. But if you bought, for instance, right here as it was moving through the high, you had about 1-2% risk if you bought right this pivot. So if you're setting your alerts, you've got the setup ready and you bought it here, then your stop is only at the low of the day, about 2%, which is pretty darn tight. And then you know that setup failed if we undercut that low intraday. And if it doesn't close well, you can also cut it before the end of the day. But just saying your stop at the low of the day within 2-3%, that's how I like to do it, but that's very tight. Some position traders like to do 5-7%. That's just kind of not my personal preference and my way to do it. So there's many different ways to set your stops. You can use a logical technical level like the low of the day or 10 cents below the low of the day. You can use a rising moving average. That's what Ross Haber likes to use. And he's very effective with it. He loves to buy when all the moving averages are bunching up like this. Let's go to net recently. All the moving averages are, actually, this isn't a great example. Let's go to crowd. So for instance, if he's buying this consolidation pivot, he's setting his stop at the 21-day exponential or the 23 exponential, the short terms. And then just as the stock makes progress, he's basically moving up his stop, trailing his stop. And when the 50-day SMA moves through his price, that's when he likes to switch over to that longer term moving average. So there's many different ways to manage your risk, but I use stop losses, and usually my stops are at the low of the day on my entry. Let's see. I'm trying to see if there's any other questions. CELH. So I think CLH, the chart is a little bit flawed. There's some gap downs. This has come quite a long way in just a short amount of time. It's forming an extended base, but once again, it's trying to move up a little bit here. So let's see your question. Did it break the DTL last week but couldn't hold? So it looks like you're drawing the DTL right here. Yeah, for me, if you're entering on the DTL, let me draw that in a little bit better here. So if you're drawing it here, if you're entering based on the DTL, you're entering it already extended on that day, and then it closed well below your entry. So I would have cut it here. For this one, you've got maybe an intraday setup here. You had a nice upside reversal and then fall through to the upside. That's when I ideally would have want to get in as it retook the moving averages. But for me, this chart is just a little bit flawed. I think there's some better choices out there. But definitely if I buy a stock based on a DTL break and it squats on me and it's not looking right, it fell in higher volume, the market is a little bit weak, I'll just cut it and move on and maybe buy it back the next day if it confirms a strength. But that's my personal style. Some people just like to hold until it breaks their stop. That's perfectly fine as well. But regardless, you have to manage your risk. Whatever you do, I always put a stop right after I make a buy order. Let's see. Let's go through these stocks because these people entered them a little bit earlier. So let's see. Let's go. We talked about Moderna, TNDM, moving out the right side as well. Just looks like it broke out above this resistance level at 104. So it looks pretty good. Once again, a little bit short-term extended for an entry now, but maybe if it has a consolidation day, pulls back, tightens up some double inside days, then you could enter during those or on strength through those. But I don't know too much about this story unless, no, it is TNDM. So this is the stock that's like Dexcom. So they handle those electronics that allow you to manage your glucose levels, I believe. So for me, Dexcom is the clear leader here. So if you look at the two different charts, Dexcom versus TNDM, which one is breaking out to all-time highs on high volume? Which one is still basically 15% off its highs? That tells you very quickly which is the leader in the minds of the institutions. So this entire base is forming higher lows right here, while TNDM was forming lower lows. So which is showing strength, relative strength versus the other? For me, Dexcom is the clear leader here. And I believe the fundamentals might show that as well. And you can see the RS line well off highs. Dexcom as well, I believe the relative strength is well off highs. But the stock is breaking out on very high volume out of an 11th month base. So it's kind of normal that the RS line at this point is lagging a little bit because this has been going sideways for 11 months now. So kind of that's kind of my take on TNDM. Dexcom for me is the leader. So Tesla I talked about in my stock market outlook video, but it reported earnings, just kind of went tight and quiet for one day and then exploded upwards. It had an inside day and up, then a 3-bar break to the upside on this day, that would have been the ideal entry here, putting your stop at the low of the day. That's a less than 3% risk. That's also got some confluence with the 200-day moving average, this black line here. And then you could have added through this high or intraday right here. And I'll be watching to see how this acts versus the 700 level. ASAN, this was a super powerful move up the right-hand side. Reported earnings on this day, stopped a lot of people out through this low, and then just took off and broke out of this this nice consolidation here. Held that 10-day, surfed that, pulled back to the 21, oops reversal here, and is back to low volume. So this bar to me is a little bit worrisome. It's a 3-bar break to the downside, but we have held up pretty well. But I don't want to see us break this line or even the 21 EMA. But I could see us retesting the 50-day at some point with this stock. AMAT we talked about already. TER just looks like it's basing, pulling back against the 200-day. But this does look like a pretty constructive base, so we'll see what happens. But you do see a lot of high volume red spikes. So within a base, I'm always looking for those high volume days. How is the stock acting on those days? And what is the daily closing range? Is it support or is it distribution? ABNB, again, one of those stocks within its institutional due diligence phase and hasn't really made a move up the right side. I was trying this back in here. I think I actually bought this oops reversal and followed through here, but ultimately I think got stopped out around here or so as it was just leaking. But for me, I think there's just better options out here. Snow, for instance, looks like it's making more progress up the bottom here. SMH, I just want to point out how it's acting well, breaking out to all-time highs. Looks pretty good. That's a good sign for the overall semi names. PINS had some flaws within its base and then had obviously the 20% earnings gap down on high volume. For me, it has to shape up and form a constructive pattern before I would be interested again. NVIDIA, this is on my focus list, looking pretty nice and quiet against the 21 EMA. This is one I'm watching for next week. And CWH, just forming a constructive pattern, a nice move off the 200-day here and here. But once again, has to start moving up the right-hand side of the space before I would be interested. In mode, just trending really nicely, looks pretty strong. This held up really well when the overall growth stocks were getting hit. And yeah, I think it's had some earnings gap ups on high volume in there as well. Amazon, another gap down in earnings, but obviously this is kind of a large cap, a super large cap, and I'm more focused on the younger names with a little bit more runway than this type of name and a little bit more volatility as well, but to the upside and downside. PanW also trending right near all-time highs. It looks like the overall cybersecurity group is decently strong. Zscaler, CrowdStrike are names I'm watching there. UPST pretty tight against the bottom of the space, and we'll see how this basically resolves itself, whether it's to the upside or to the downside. PFE, along with Moderna and BNTX, was super powerful the most recent few weeks. You had a pivot breakout here around 40, and now it's consolidating right near this important level of resistance. So once again, if you didn't buy it right on this breakout day, within this bar or right near this pivot, you're entering a little bit extended, especially if you're buying here. It's already made a run of, well, actually not too bad, 7%, but this might be a little bit of a slower mover stock. But if you're buying it this day, you might have to sit through a pullback, a natural pullback. And if you are managing your risk properly, you might get shaken out just on a normal reaction. So that's why I like to buy as close to that pivot day and as close to that pivot as possible. Roku, we talked a little bit about it. Earnings next week, I'll be watching that to see if it resolves itself to the upside or downside. And if we have a gap down like pins, or if we have a gap up through the pivot like Snap, for instance. eBay doesn't look great, not great action on this Friday. I don't know if this was earnings or not, but a pretty poor closing range on high volume. So Dennis has a good question. How many stocks do you have alerts set for each day? I have mostly just my focus list. That's for the most part, and then one or two or three of these leaders that I'm also watching. Maybe they're a little bit too extended. I want to see how they're acting, but also I'm flipping through these watch lists, seeing what is up on that day, whether it's moving on volume or high volume or low volume, and seeing what's acting well. So to answer your question, mostly the focus list, those 10, 15 names I'm watching, those are the ones I'm really focused on and have alerts set. let's see. Coming back to Dexcom, I see that its RS line is still quite low compared to that last RS line high. Does that concern you at all? Great question. So usually we want to see the RS line even leading the stock to the breakout. So a lot of the leaders last year, if we go to Zoom, the relative strength line was making new highs before the stock was breaking out into all-time highs. And that's the ideal scenario. But Dexcom, it's kind of a little bit of an exception because it's been basing for a year, 10 months, 11 months. So obviously it's going to be lagging the market a little bit. But the most recent trend of the RS line is up. So in a stock that's been basing a long time, I want to see some outperformance along the right side before the breakout. But it doesn't bother me too much that we're lagging with the RS line. But ideally, I would like to see the RS line at least confirming the breakout at the same time. But I think this is the exception, a nice longer term base. NVIDIA as well, the RS line wasn't super great as it tried to break out. And you can see it made price new highs. These blue bars here show price new highs, and then you have the pink bars showing when it makes RS new highs. So it broke out in terms of price before the RS line, but this was a longer term base. Let's take a look at you. There's another one, I think, in its institutional due diligence phase, and this looks pretty good. I think I have it in my my universe list. I'll be watching this one, but we'll see what happens here. I might set alert right now, right below this resistance point, and there we go. So we'll see how that acts. It also lines up with this resistance level, so it's forming a nice constructive pattern. This volume concerns me a little bit, but we are getting a little bit extended. But I would like to see some big volume to the upside, and we do have some evidence of pocket pivots right in here. Let's see. Yeah, Zoom was screaming relative strength during this market correction. You can see it gets all wide and loose here and emotional, but it's making new price highs while the market is still bottoming, and it basically led the market 10, 15 days, and the best leaders will do that. Peloton as well, I think, was acting really strong during this bottoming period. You can see that it forms the bottom about 5 days before the market does. So that's another sign of relative strength. Tesla as well made RS new highs before price. You can see it made RS new highs here, 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 and here. And also looks like it bottomed just a few days before the market. Evan wants me to take a look at SOXL. So this is going to track pretty similar to SMH. It's acting constructively. So there's definitely a way to play the semiconductors if you want to basically buy a bit of the whole industry. James is talking about the Zoom cup and handle. Are you talking about right here, or are you talking about this being a cup and handle? For this to be a cup and handle, so for me, a proper base happens after an extended uptrend. So ideally, I want to see an uptrend, and then it forms a nice base, and then starts moving up again. This is within the context of a downtrend. So although it is a nice constructive bottoming process, I wouldn't classify this as like a really proper base, if that makes sense. Jamie asked, you mentioned about setting day low tight stops. Isn't that too tight, as the likelihood of stopping out is much higher if the stock is too volatile? Yeah, you might get stopped out, but it might also protect you pretty quickly. And I like to try multiple times at a stock right at the breakout point. So setting those type stops means it either works or it doesn't. And if I'm wrong, I take a very small loss. And if I'm right, I might have a pretty good sized position right off the bat, right as the stock is getting moving. Let's see. Sava, let's take a look at that one. I'm not super familiar with this. Looks like a biotech here. Let's take a look at this stock in Marketsmith, because whenever I find a new name, I always take a look at the fundamentals of Marketsmith to get a sense of things. So let's go ahead and do ownership and funds as well. So nice increase in number of funds. No earnings or sales. So this is a true biotech. I try to avoid these, to be honest. Just they trade on a different type of cycle with a bunch of news, trials, all of that. And it looks like we had a big downside reversal this day and then fall through to the downside here. So I would not be interested in this stock at all. It's just it needs to form a tight range before it's even tradable. At this point, it's very high risk to take a long position. You could easily just fall through to the downside back to the 200-day. So this type of stock is not for me. Let's see. Let's take a look at some more names. Yeah, Sid says, I tried AMD 3 times before this one finally. Yeah, absolutely. Yeah, that's the way to do it, because if you take small losses, you can try a stock multiple times, and it not only protects your financial capital, but as Ross Haber likes to say, it also protects your psyche, your psychological capital as well, because you're willing to give it that other shot because you've only taken small paper cuts the other 2 times, and then one nice breakout through that pivot can get you can basically pay for all of those small paper cuts and then some. And that's really the key. Take much smaller losses than your average gain, and that way you don't even have to be right 50% of the time to make good money in the market. Felix asked a random question: TC2000 versus TradingView, which is better? That's a good question. So they're very similar. I've used TradingView as well. I think I had a subscription for a few months or so, but I fell back to TC2000 because I like the programming language a little bit better here. I like the volume buzz, the watch list, all the things you can do here. But TradingView is also a fantastic software. I love the Pine script, which is basically Python code. You can do a whole bunch there as well. And TradingView is kind of my go-to if I'm out, not on my main computer. I'll bring up TradingView, and also they have a great app as well. So nothing against TradingView. I also use that, but TC2000 is probably my main source for charting, and then obviously Marketsmith for fundamentals at this point. CRCT, I talk about that in my weekly watch list video, so go ahead and watch that if you haven't yet. XPEL, let's take a look at that one, because this is high on my fundamental list. Nice. First thing that catches my eye is a lot of nice blue up bars, so some good volume coming into this name. That's a good sign. A little bit of failed breakout here, but it has bounced back a little bit, but not setting up perfectly for me. But yeah, definitely tradable here. And yeah, it just hasn't set something up that I would trade at this point. And these 2 bars do give me pause. They are on above average volume, but it has rebounded and held above those key moving averages. FTNT, let's take a look at that one. So this one has just been trending beautifully. It's been really strong. And this day it looks like it recovered all its losses. So it's staying within this trend really nicely. But once again, it's kind of extended from a base. It's a little bit of a slower mover as well. But if you catch a trend like this, I mean, stick with it. It's doing nothing wrong. So for me, I'm not really looking for an entry into this, but if you bought right as it broke out to new all-time highs from this base, I mean, you're holding a winner here. You want to hold on to that. It's kind of it's not an easy, but it's an easy 70% in just under 6 months. So if you can just catch a few of those a year, that's a superb return. Superb. Let's go. NOAV. Let's go look. Oh, I can't spell. NAOV. Yeah, this immediately looks like a pump and dump. It might not be a pump and dump, but just this is not a type of stock that I trade. Low dollar volume too, but this is way too volatile for me. I mean, it's up 248%, down 27%. You can't manage risk in this. At least I can't. So this is not for me. And the only way is to use very small positions, and that's not really my style. So thank you, Jamie. That's awesome. Let's see. LSCC, another semiconductor related name. This looks very similar to SMH, as it should. And yeah, it's shaping up. I'll be watching this pivot here, and yeah, see how it acts. Looks pretty good. And I'm not sure what stage base this is. Let's go over to Marketsmith quickly and type in LSCC. So there we go. So this is a stage 3B, so a little bit later stage, and it fell back to the sell point. But this is still, in my mind, a consolidation with a standard pivot of a 58.38 or so. So it doesn't look too bad. We'll see what happens. I would like to see more volume on the upside and some higher quarterly earnings numbers, annual estimates. But the trend in fund ownership is perfect. 3 high quality funds, that's great. But you do have earnings in 2 days, so keep that in mind and manage your risk accordingly. Yeah, Sid, I talk about that a little bit in my weekly watch list video. SI and Mara. Yeah, that's a way to play the Bitcoin names. Actually, I accidentally clicked that. Let me X out here. But SI, Mara kind of shaping up along the right hand side. Still have a lot to prove, but I'll be watching these to see if they can break above these pivots. Mara looks very similar as well. Pulling back on low relative volume after a move up on high volume. But right here is a little bit whippy, especially on SI. This is super volatile in here. And I was trading it from here and made a decent gain, but I felt it here on these drops. That was really hard, and definitely got stopped out, and didn't quite get as much gain as I should have, to say the least. Coin as well, I talk about in my weekly watch list video, but I'll be watching to see how it acts versus these pivots and this one as well. It is below the anchored view out from the IPO, so maybe some resistance up here, but we'll see how this acts. It looks like it's bottoming. Some nice bars here, here, and here as well. And lastly, I think we'll cover Snap, and then I think I'll end it there. But lastly, we've got Snap. This is one that I'm watching very closely, and I have a half position in this stock at the moment. But it's pulling back to the pivot on below average volume. I would like to see some reaction here, but I think it could go sideways for a few weeks and frustrate everybody and bore everybody before taking off and moving, as we saw from Pins last year, which had a monster earnings gap and then just went quiet for 1.5 months. So I could envision Snap doing a similar thing, but for now it's acting really well. Going over to a weekly chart, I think this looks really good. A strong move up on high volume, and then a pretty tight week holding above the pivot as well. So looks decent. Yeah, this is one I'll be watching pretty closely. And I think this is actually just a stage 2 base in Marketsmith. If we bring that up right here. So yeah, this is a stage 2 base. So still pretty early stage and nice volume on this gap up. Definitely a sign of institutional accumulation here. Earnings surprise 155%. That's fantastic. Earnings estimates are increasing. Nice increase in fund ownership and for high quality funds. Hey Ben, how's it going? Yeah, you're waiting for that anchored view out touch, aren't you? For sure. Yeah, I recommend everybody with all these earning gap ups with Dexcom and LC, all that, to go ahead and watch your presentation at Traderline for sure. So with that, guys, thank you guys all for tuning in. Hopefully we can make this a regular thing on Sunday nights. Let me know in the comments here and also on Twitter if you'd like me to do this regularly. I'd be happy to do so. But make sure you guys establish your weekend routine. It's all about creating a plan that you just have to follow and execute throughout the week. Manage your risk accordingly, focus on those leaders, and you guys will do well. So with that, I'll end the stream, and thank you guys all for tuning in. And please go ahead and leave a like down below and subscribe if you haven't to my channel. I post, I think, decent videos every single week to try to help you guys prepare for the week ahead, as well as kind of show you guys my own weekend routine. So with that, thank you guys all for tuning in, and I'll see you guys in future videos and streams. Thanks.